Welcome to Your Average Investor. Today I'm going to show you how to execute the wheel strategy so that you can choose to use this or not choose to use it for profit or extra profits in your trading. Now, as always, this is not investment advice. This is just for education and entertainment purposes. And if you haven't already, please subscribe to the channel to help support the channel and help us get monetized. So the wheel strategy, very simply, it starts by either selling some cash secured puts or buying 100 shares of a stock and then turning around and selling covered calls on those shares. And it doesn't matter which side that you start with, it's just preference. And sometimes you'll use a price chart to determine, right, like, okay, we've been in a downtrend with the S&P 500 and it looks like we're catching on this VWAP, and I think it's going to be the end of the downtrend and show an uptrend. So maybe what I'll do here is sell some cash secured puts just in case we continue to have a little bit of a dip down, and I'll use that as my entry point. So let's say that's my strategy, right? So what I'm going to do is look for something about 30 days out. You could do any time frame. I'm just going to choose 30 days just for ease of this demonstration. And let's say I'm like, I think that the 375 is a really good support zone. So I'm going to sell two put 375s. This is going to generate $1,500, almost $1,600 in premium for me. And of course, you can see I'm playing with a $100,000 account here as a simulated account. And so I've got plenty of cash to secure those two puts, right? So if I do $375 times 100, that's going to cost $37,000 to secure that put. And of course, I did two contracts, so that's going to cost $75,000 to secure those two puts. But let's fast forward to February 3rd now, or thereabouts. We'll go to the beginning of the week, and we're going to see what happened to the S&P 500. If I go back to the charts, it looks like the S&P has actually gone up. Remember, it was sitting at about 385. The price is now $400 per share, which means these contracts are going to be almost worthless. Yep, there we go, $9, $10. So I can just buy those back now and look to do something else. So it releases my capital that was being used to secure those puts. And this illustrates one of the first examples of the risks of doing the wheel. So you notice I've gained $1,576. Well, what if I just bought 200 shares of the S&P 500 at 385? Well, I would have gained about $15 per share by now, times 200 shares. That would have been a $3,000 profit if I would have just bought and held. So that's one of the weaknesses of the wheel, is if you have a strong rally in the underlying stock, it doesn't matter if you're selling cash secured puts or covered calls, you're going to miss out on that maximum, potentially miss out on that maximum appreciation. However, if there's a lot of chop in the market, you end up doing just fine. So let's say at this point I'm like, oh man, the cash secured puts haven't made me the money I expected yet. I could have gotten better buying and holding. Let's just try it one more time. I'm going to move about 30 days out again, and I'm going to sell, let's go right out of the money here, these put 400s. So I'm going to sell two put 400s. And it looks like that order, there we go, went through. And I made about another $1,500 on that. And we're going to fast forward now to just before March 3rd. So we're now in January, February, and here is March 3rd. We'll go to March 1st, just the beginning of the month. And we're going to take a look at the chart. Look at that. The price of the S&P 500 is now $394. Remember, I sold the put 400s, which means I'm going to be about $500 or $5 in the money. There's my strike right there. And so let's just fast forward a couple more days to the actual day of expiration, see if we get exercised or not. Remember, getting exercised means the price moved below the price that I sold if I'm selling a put, or above the price that I sold if I'm selling a call, and so I'm forced to either buy or sell shares at the price agreed upon. Well, lucky me, now the price happened to rally during these last couple days. We're up to 403. These are worthless, so I'm just going to buy them back for pennies on the dollar. And this is another great example, right? So if I would have bought 100 shares of the S&P 500 at $400 a share, or thereabouts, it was at like 401 or something. Well, in that case, I would have made about $400 profit from 401 to 403. Instead, I made $1,500 profit because the premium that I received was worth more than the price appreciation that we got here. So in this case, I ended up winning. And again, if we look at the total, if I would have bought at 385 and sold now at 403, I would have made $18 per share times $200, $3,600. And you can see I'm not that far behind. I've made about $3,000 in premium. In this case, there would be $3,600 had I just bought and held. There are a couple other caveats here, of course, which would be dividend risk, right? So I'm missing out on dividends here, which the S&P 500 pays, and what I would call tax risk. If I'm buying and holding, I get to, if I've held for over a year, when I sell and I collect my profits, I get to be taxed at capital gains tax rates, which are lower than ordinary income. When I'm selling and buying options like this, that's going to be taxed at an ordinary income rate, unless you're doing it in a Roth IRA account, in which case I believe it's not taxed at all because it's a tax-free account. I'm not a tax accountant nor a tax expert or anything like that, so don't take my word for that. Do your own research, talk to somebody who actually knows more about taxes than me to verify. And same with all of this. This is my opinion. This is education, entertainment. Do your own risk. But you can see how this works, obviously. We're going to be using this strategy for the $1,000 account challenge, and we're just going to work with stocks that fit for our budget. So obviously at $100,000, I can do a lot with SPY. At $1,000, I can't. So I'm going to be looking more for stocks like SoFi, which right now I believe is trading at about $7 per share, ironically, because about a year later, the price hasn't really moved much. So it's an excellent stock, in my opinion, to do the wheel on, because the price is just going to pitter up and down until it eventually breaks out. During that whole time, I'm going to be selling premium and collecting that, increasing my account size, and then eventually, right, so maybe I move from $1,000 to $1,500, and so I look at a stock like, Riot's at higher than that right now. Riot's sitting at about $11 or $12. So I look at Riot, and then maybe eventually I look at GameStop, or I look at Palantir, which Palantir is also higher than this right now. Palantir is about $20. And you just move your way up the chain until eventually you're sitting pretty with 100 shares of the S&P 500. Thanks for watching, everybody. Hope you enjoyed. Drop a comment below, drop a like, drop a follow or subscribe or whatever the heck it's all called. We're starting the challenge tomorrow on May 23rd, 2024, depending on when you watch this video, because this video is very helpful for other things too. But the challenge may already be ongoing. If the challenge hasn't started yet, though, and you're just watching this, go ahead and follow so you can see what we do. It's going to be a blast.